Have you been trying 600 different trading plans and still cannot find the right fit for you? What we do on this channel is automate any type of strategy, from supply and demand to support and resistance to ICT and SMC concepts, to find you the best trading plan out there, prove what works, prove what doesn't work, and then increase your trading performance by sharing that strategy. For this particular video, make sure you check it from beginning to finish. Why? Because I'm gonna drop a very profitable ICT concept that we have tested, which is pretty rare to find because most of the concepts don't work. But we found one concept that is really good, and we're gonna drop the trading plan piece by piece, showing the strategy on the charts with you, that we automated it, see what the backtest results are, some key findings about what to trade, what not to trade, and so on. So let's get to the charts, dive in, and make it a productive session. So let's start by diving into TradingView, show you the trading plan step by step, show you 2 trade examples, and then you have this highly profitable trading strategy for yourself. You can test it yourself. Then we go to the back test. I will show you 2 different management styles that I've tested. Of course, you can still improve it, and I will show you that we automated it, and quickly go to MetaTrader to see you. Okay, cool. You can literally automate any type of strategy. So let's get started. Right here we have TradingView, and what I want to show you is the first rule. It's very simple. Multi-time frame analysis is being used, so you use 3 different time frames to plan your entry, but also plan overall your direction of the trade. You have here the daily, the 1 hour, and the 15-minute time frame that we use. On the daily time frame, what I need to see is to take out a swing high or a swing low. In this example, we took out this high. You might not consider this as a strong high, but what I always do is make it mechanical. So I just use fractals, for instance, to define, okay, this is a high, this is a low for me. With that said, this is how I define swing highs and lows, and you can see and follow this trading plan with me. What is happening here? First rule, you need to take out a high. That happens here. We can quickly go back in time a little bit here. That's the only thing I want to see on the daily. Just take out liquidity here on the daily, and then we go to the 1 hour. Second thing I want to see, so right now you can see this line. The second thing I want to see is on the 1 hour time frame is a break of structure. Also very simple, right? You can see you wait, and there you have your break of structure. Let's delete this line. Let's quickly explain how that looks like, and then we can continue further and share this good strategy. We have here the break of structure, and what I want to see first, and that's really important, and that's what you cannot forget, is the daily high was taken out yesterday, and then today I want to see a break of structure on the 1 hour. Yeah, not on the same day, just the next day. That is the rule. So right here on the 29th, we took out that high, right? If we go back to the daily real quick, we can see, okay, on the 29th, we took out that high, and then we had the break of structure on the 30th. Yeah, that's really important to know, otherwise this won't work. So therefore, take your notebook and draw it out for yourself. First, we have a break of structure. What is the next and the last thing I want to do? The 15-minute time frame to time my entry. But what I want to see is a fair value gap that happens in the New York session. So right now, it's 3 in the morning when this is developing. I need to wait, or the system, the algorithm needs to wait until a fair value gap happens in the New York session. So right here you can see the New York session starts about here for my time zone in Amsterdam. We go to the 15-minute time frame, and where is the fair value gap? So real simple, you can quickly look here. Here's the fair value gap. What do? The system enters here, right here, or on this candle, but let's do it like this. And then there's another very important rule. I always use percentage of price stops based on my algorithms, what I built, because I tend to find that more profitable. I don't really look at the pips here. You have 18 pips here. You can use this high, but I like mechanical rules, real simple trading plan. I optimized for a stop loss size, and that is 0.3% based on the last 5 years of backtesting and quite a large sample of using different stops. So a 0.3% of price is right about here. So you can see that 0.3% is where my stop is. What is my risk to reward? I will show you 2 backtests, one with a 1 to 3 and one with a 1 to 5 risk to reward. For this particular example, let's use 1 to 5 because that was the most profitable. Let's quickly click play, and this is your entry. So now it's just a patience game, right? It's no management. I didn't test management yet. This is just a raw, very profitable system already. But you can of course trail your stop loss, do things you want to do. Right now it is running. So this is the first trade example I'm going to share with you. Almost target there. Let's see if we can hit it. And then you have your first 5R with this strategy. You can just analyze this for yourself as well. Let's quickly wait until it plays out. There we go. Cool. So let's go to the next example, the next one I want to share with you to really bring this home, because there are some slight changes you need to know about. With that said, this high was taken out, but you can also see this swing high was taken out, right? The beautiful swing high taken out. Remember the trading plan, the daily is taken out. Next day, I'm going to look for a 1 hour break of structure, and then the next New York session, I'm going to wait for a fair value gap and enter. So with that said, it is now, the spike was the 30th, and then I'm waiting for the 31st of August to see that break of structure. Let's quickly see what's going on here. Well, a clear break of structure, right? A clear move to the downside. You can see right here, big push, took out this low. What am I waiting for the next New York session? So that is still a bit more time required there. Let's see, let's go to the 15-minute time frame and look for that fair value gap that literally happened in New York session. And I can already see it, this right here, when the New York session starts for us. And there you go. So what is my stop loss? Again, 0.3, you know the deal. What is my target? 125. Previous example banked the 125. This one, the day after, is looking pretty good, I think. I haven't seen this one. Let's see if it plays out or not. You can of course add management, like I said, you can do so much. So let's see if this plays out, and then this looks good, and then go of course to Quant Analyzer and MetaTrader, quickly showing you, okay, what's more important? Are long trades more profitable than short trades? What are the monthly returns? What is the risk per trade, etc. So let's see, can we hit the profit target? And yes, there we go. So let's quickly move now to MetaTrader. So this is Quant Analyzer. I told you let's go to MetaTrader quickly. You can just see here on MetaTrader 4, I have automated this system, and you can just wait for trades to happen and see them play out here. So this was your first trade. What happened? We took out this low, and then we had a fair value gap on the lower time frames. This is the daily time frame, but you can just run a back test, and if you do that the whole period, what you will see is that this is the equity chart if you have a 1 to 5 risk to reward, and this is the equity chart with a 1 to 3 risk to reward. Exactly the same strategy I shared on TradingView, but we like to backtest, right? We want to automate our strategies for 2 reasons. You never want to miss any trades, and if you automate the strategy, it will just run and you will never miss a position. You don't have to watch the lower time frames, you don't have to be at the charts, so we don't want to miss any positions. And the second reason for automation is to build confidence, see if it works, and be able to collect a lot of data and then improve on the data by changing management styles, risk to rewards, stop loss placement, targets, etc. What we can test in a day is insane compared to what people are testing in a year with manual testing. Like, we can test hundreds of strategies in a short period of time, while a manual trader of course can only test a few. And the big rule, or the big key to success in this industry, is to test as much as possible, as quickly as possible, and find that edge and capitalize on that edge in the markets. So let's quickly wrap up this video. You can see longs here and shorts here. Shorts are more profitable, and that's clearly clear pattern here. It's pretty interesting to see that. Why that is, I don't know. You never know, right? But that is how we can analyze these type of things. We can also go into what are the returns, and this is looking pretty good. Last year was 50R, and this is just euro dollar, right? We can do this on pound dollar, dollar yen. We can just test it on multiple strategies and then really stack a lot of nice R's together. So this is overall return of 292% with 1% risk per trade. 22% drawdown, pretty high drawdown, but still a really nice strategy, and it is just one pair. So the next thing I'm gonna do is of course backtest this on other pairs, build a portfolio of pairs, and then see how much profits this strategy can make. Thank you for watching, and I see you in the next one. If you want to see more reviews, go to our channel, subscribe to our channel, but also check out the past videos, because we have reviewed a lot of things right now, and I think there's a lot of value in it.